Hello everyone. Welcome to the Blockchain News Club. Let's take a brief intro into today's crypto updates before going into the details. CFTC chairperson Rostin Behman has reiterated that cryptocurrencies like Ether and stablecoins should fall under his department for regulation. Michael Barr, the Fed's vice chairman for supervision, said the central bank is trying not to stomp on crypto innovation and sees the need for stablecoin controls. Global financial messaging giant Swift has announced progress in its CBDC interoperability solution testing. In response to the recent ruling in the Binance US and SEC court ruling, attorney John Deaton believes that the SEC's arguments are without merit. Whales have reportedly transferred $10 million in XRP off the Bitso cryptocurrency exchange. Before we dive deep into today's updates, if you haven't subscribed to our channel yet, please hit the subscribe button. It will help us a lot. CFTC opposes SEC's crypto position, calls ETH and stablecoins commodities. The SEC's attempt to get control over the crypto market has run into trouble because different agencies don't agree on how to regulate coins other than Bitcoin. Rostin Behman, who is the head of the Commodities and Futures Trading Commission, told the Senate Agriculture Committee on March 8 that Ethereum and stablecoins are both commodities. Gary Gensler, the head of the SEC, said in February that everything but Bitcoin is covered by securities laws. Behman's view is the exact opposite of Gensler's. Behman was asked about Gensler's claim that the SEC has a lot of power, but the CFTC chair argued back. Behman used arguments in cases he had dealt with before about crypto in his department to back up the CFTC's claim that crypto should be regulated as a commodity. In its case against Sam Bankman-Fried, the former CEO of FTX, the CFTC called Bitcoin, Ethereum, and Tether commodities. I have made the case that Ether is a commodity. It has been listed on CFTC exchanges for a long time. Because of this, it gives us a very clear way to police it, as Behman explained. The CFTC chair was asked more questions about the competition for oversight between the SEC and the CFTC, and Behman made it clear that he wasn't going to back down. We thought very deeply and thoughtfully about, what is the product, and does it fall into the commodity regime or the security regime? We would not have allowed the product, Ether futures products, to be listed on a CFTC exchange if we did not feel strongly that it was a commodity asset. He underlined. Behman has dealt with Ether futures products, and he has also worked with stablecoins, where he repeated that these assets are commodities. Since Paxos got a Wells notice from the SEC in February, stablecoins have been getting a lot of attention. But BUSD was not the first time something like this happened. The CFTC brought a case against Tether and USDT in October 2021. Behman told people about the CFTC's investigation of Tether before the event. As a result, the stablecoin company agreed to pay $42 million to settle charges that it had lied about how much money it had on hand. Colleagues may have a different opinion, but we did the legal analysis when we looked at the Tether case, he said, explaining that stablecoins are commodities. There is a larger question about what direction stablecoins should be going, in terms of regulation, and I agree stablecoins should be prudentially regulated financial instruments. Notwithstanding a regulatory framework, they are going to be commodities, Behman added. Federal Reserve setting up new squad of crypto specialists. Michael Barr, the central bank's vice chairman for supervision, said Thursday that the Fed is putting together a specialized team of experts to help it keep an eye on the crypto sector. The Fed's top regulator said that digital assets experts are needed to help us learn from new developments and make sure we're up to date on innovation in this sector. Barr, the Fed official who could have the most impact on how the central bank regulates and oversees crypto, agreed with Fed Chairman Jerome Powell's comments this week that the banking regulator wants to protect crypto innovations while putting up guardrails. Barr spoke at an event for the Peterson Institute for International Economics in Washington. He said, despite recent events, we haven't lost sight of how these technologies could change our financial system. But he also had things to say about the business. While crypto assets are marketed as being decentralized, there have been new, very centralized intermediaries that are either not subject to or don't follow appropriate regulation and supervision, which has hurt consumers, said Barr, who used to work as an advisor for Ripple, the company that made the XRP token. In general, we think that, at this point in time, banks should be careful about getting involved in crypto asset-related activities in the crypto sector. In the U.S., the Fed and other regulatory agencies like the Federal Deposit Insurance Corporation and Office of the Comptroller of the Currency have been putting out guidance and policy statements about digital assets over the past few months. Barr said that people will keep making statements like these. When asked if the Fed should have caught crypto concentration problems at some banks long before the banks issued public warnings, Barr said that his agency tends to give small banks more leeway than larger ones. He didn't name this week's example of the collapse of Silvergate Bank, but he did say that his agency tends to give small banks more leeway than larger ones. Smaller banks are getting very involved in cryptocurrency activity, which has been noticed by the Fed. It's not clear how much they're exposed to correlated risks, he said, adding that the crypto winter has shown that risks in the crypto sector are highly related. He said, "We tend to take a light-touch approach with smaller institutions, so it's more on them to pay attention to these new and different risks, and we need to make sure they know that." He also talked directly about stablecoins, which had been a big worry for the Fed ever since Facebook's DM project failed. A large number of people using these tokens, which he called private money that is not regulated and is subject to classic forms of run risk, could put the whole financial system at risk. Barr said that if stablecoins were widely used before regulations were in place, it could cause tremendous disruptions, not just for financial institutions but also for people who might depend on the coin. Congress has a very important job to do right now in setting up a framework for stablecoins. Ripple faces new challenge as Swift advances CBDC cross-border testing. Swift, a global company that sends and receives financial messages, said that it has made progress in testing its CBDC interoperability solution. Swift works closely with the financial world to make sure that as CBDCs improve, they can also be used across borders. This is why it came up with a way for CBDCs to switch between DLT-based and fiat-based systems using the financial infrastructure that was already in place by October 2022. Swift says that 18 central and commercial banks, including the Banque de France, the Deutsche Bundesbank, and the Monetary Authority of Singapore, have now tested the solution in a sandbox environment. 4 more central banks watched the sandbox testing but did not take part in it. The financial messaging giant says that a beta version of the payment solution will be made in the coming months. This is because the testing went well. There will also be a second round of sandbox testing, which will focus on new use cases like cross-asset exchange, trade finance, and payments that are only made if certain conditions are met. Ripple is making moves on CBDC compatibility in 2022. Ripple sponsored the CBDC Innovate Challenge, which encouraged developers to build CBDC apps using Ripple's technology in 3 categories: retail, interoperability, and financial inclusion. Spend the Bits, which is based on the XRP ledger, lets regular people pay for things in multiple currencies, such as CBDCs, cryptocurrencies, and stablecoins. The Spend the Bits app has a CBDC portal, a mobile and merchant app, and an exchange portal. This makes it possible for the apps to work with each other and for there to be liquidity. In related news, Ripple's managing director of APAC and MENA, Brooks Entwistle, recently said in an interview that the company was in talks with more than 20 central banks about making a digital currency for central banks. Judge accuses SEC lawyers of personal biases in Ripple lawsuit. Can we expect a settlement anytime now? The Securities and Exchange Commission of the United States is going too far in making claims that don't hold up. John Deaton agrees with this point of view. Since the SEC versus Ripple lawsuit started, the lawyer who started Crypto Law and also hosts it has been a strong supporter of Ripple. Deaton has recently talked about the many ways in which lawsuits against US-based companies have shown that the SEC has not been fair. According to recent news, a bankruptcy judge sided with Binance US and against the SEC, allowing the exchange to keep buying Voyager's assets for $1.3 billion. The lawyer said that the SEC didn't give Binance the right to make the purchase because it had an anti-crypto agenda. The lawyer pointed to the ongoing Ripple case, the LBRY case, and the Grayscale SEC hearing as examples of cases that show the SEC's arguments are flawed. John Deaton gives a list of the problems with the SEC's arguments. The lawyer brought up the Ripple case and the written ruling that questioned the SEC's credibility and pointed out its biases. He wrote in another tweet, "In Ripple, the judge said SEC lawyers are more interested in advancing their own agenda than adhering to the law. Think about how significant that is. How do SEC lawyers enforce the law if they don't themselves honor the law? As a former federal prosecutor, I'd be ashamed." Deaton said that the court keeps the SEC in check. In response to his writ of mandamus, the SEC agreed that the judge, not the SEC, has the last word on what is or isn't a security. Deaton came to the conclusion that crypto firms and cryptocurrencies will only continue to do well if judges continue to look over the SEC. He also pointed out that Gensler will not be chairman of the SEC forever. Whale removes $10 million of XRP from wallet, predicting XRP price. In the last 24 hours, the price of XRP has gone up by 1.5%, reaching 39 cents on a day when news of Silvergate's voluntary liquidation caused the market to be volatile. Since the beginning of 2023, the value of the coin has gone up by 15.5%, but it has only gone up by 2.5% in the past week and has stayed about the same for the past 30 days. When you add this rising trend to the rising hopes for Ripple's appeal against the SEC, it paints a good picture for XRP. And since a whale is said to be moving $10 million worth of XRP off the Bitso cryptocurrency exchange, it's likely that coin holders are getting ready for big returns later in the year. The XRP chart shows a bullish reversal, which is a quick move in the right direction after a string of negative signs. If XRP can break through the 40 cents barrier it is currently facing, there will be more to be happy about. One whale just moved 28.4 million XRP off of the Bitso market in Mexico, which shows that investors are expecting prices to go up in the coming weeks and months. Since this Bitso transaction, there have been a few other big XRP deals. One whale moved $23 million worth of the cryptocurrency to Bitstamp yesterday. At the same time, 150 million XRP, or about $58 million, were sent from two unknown wallets to each other. This was a lot more money than the previous transaction. So, XRP rallies might be expected in the future, but there isn't necessarily a consensus in the market right now. Still, most people who have been keeping up with Ripple's long legal battle with the SEC tend to agree that things have gotten better for the company in the past week. For example, this week, Judge Annalisa Torres denied the SEC's request to remove crypto-focused lawyer John Deaton as a witness for Ripple. However, she did agree with Ripple's request to remove expert witness Patrick Doody. These two decisions may have shown how weak the SEC's case against Ripple is, since the agency hasn't been able to show how the company gave XRP customers a reasonable chance of making money. This week, attorney Jeremy Hogan tweeted that he agrees with this view. He asked, "How in the world can the SEC prove reasonable reliance?" This is also in line with what has happened in the case in the past. Last year, the court gave Ripple access to important SEC correspondence and backed up its claim that it had been given fair notice. Given all of these small wins, it seems likely that the case will end with a summary judgment or settlement that is mostly in Ripple's favor. And Ripple's Brad Garlinghouse says that this is likely to happen this year. If the result is good, there is a good chance that XRP will go higher than its current record high of $3.40. This would require a more bullish market, but since XRP missed the bull run of 2021, it may rise more quickly than other big coins when the bulls come back. Even though there is a legal dispute going on right now, Ripple's business is still doing well overall. In its Q4 2022 XRP markets report, which came out in January, it talked about how it made $226.31 million in net sales of XRP in just that one quarter. Also, its on-demand liquidity product has been introduced in France, Sweden, and Africa, making it available in more places. It can now be bought in more than 40 countries. This shows how Ripple is set up to grow quickly once the case is over, bringing XRP along with it. Thank you for watching. Please subscribe to our channel for regular updates in the blockchain community.